Good day, AVZ Traders. I trust you are well. I hope you can hear me well. Got a scratchy voice, sore throat, all sorts of funny season changes things. But I'm okay. High of yesterday, low of yesterday, UK100. Good run by the Bulls yesterday from the open London session. Went sideways into the US session. This was the first candle for the US. And this sideways price action here ended up being the middle of the day. So, bulls had a second leg, first leg, complex pullback, if you want to think of that, to a prolonged, long, all sorts of things. Eventually, they'd follow through, giving us the high that the market said, well, that's the highest this asset's going to go. Asian session today, look at what bulls did. They failed to break out decisively. Now, this is important when we're talking about strategy one. Break out at any time for whatever reason, or even if it was at the open of the index. When you see something like this, that's very weak. First candle above the high of yesterday's got a tail, second candle's inside, third candle's a doji. So the market is going up, but there's nothing decisive that you'd have said, hey, I missed strategy number one when this took place. Now, it didn't even give us a clean enough strategy two. Because remember, when you want strategy two, you want the market to be going up, coming back to the EMA. So you probably wouldn't have taken that. If you had, the stop has to be down here. But because of this weakness here and, pretty indecisive, nothing for you to say, guys, the market is going up. Let's find a way to get in. Right up to the last candle before the London session. Now, this is very important. I come into the market, I typically want to be seated at least a full candle before the session starts, so I can see what's taking place. Where are we in terms of our valuation zones? So when I saw that for me raised a big question about the bulls that pushed the market above the high of yesterday. Why would you allow such a strong bear candle to reverse? I mean, this is hours of price action, right? Reverse almost 4 hours of market moves. Why would you allow that just before the London session opened? So strength by the bears, good for them. But of course, we want to see if we're going to close beneath the high of yesterday. So first candle by the bears, very beautiful candle. Now, let's look at a few things, right? You don't have to remember all of these. As you go through the videos, you pick up more and more of it. But just before the open, there is that bear candle. The bears who took that, they're obviously saying, well, we're going to get a measured move, and that measured move will take us beneath the high of yesterday, and everyone's going to be convinced that the bears are strong, we can sell more. So bears can see that. And you got to be thinking, well, if these bears are strong enough, let's see if we get the measured move. And they got their measured move. Now, the bears then have to carry on with the thinking, hey, we're strong enough to reverse all of the bullish price action since the market opened. Since the market opened, first time above the high of yesterday, we reversed it as we created this first candle of London session. Now, the bears now have two candles that they can consider as a breakout candles. So they say, well, with those two candles, if we're strong enough, we want to get to the measured move. So that is already a target for the bears. They've also got a little bit of resistance in the way, a little bit of support, Dr. George. The low of today, but they can see that, but they're looking at the strength of the bear breakout. Now, the bears that just got in at London Open, they can also just look at their candle and say, well, the measured move for our candle is here. So we can see this measured move, profit targets here. If I'm only going to be worried about the measured move of the first candle, I'm well within the measured move of these two, breakout trend candles. So you have options. When you see that and you can interpret what's happening pretty quickly, you can sell beneath here. Remember, we always sell the breakout. We want to sell the breakout, the breaking of the candle. So don't sell when it's closed. Wait for the next candle to break out beneath it. So you can sell that. You can see the profit targets that are down here. And if you're just looking at the first candle, well, you did get your 1 times risk reward. If you're looking at a little bit higher, you got a little bit, you came a little bit short. Now, because you don't see all of this as the market is unfolding, other bears are seeing this third candle and saying, well, there's higher probability with that. I can still sell here. But now, if I'm selling here, I'm not going to put my stop up here. I'm going to put my stop above the first candle. So these bears will be saying, okay, so I can sell here. I'm now beneath the law of Asian session law of today. I can see profit targets here. So I'm going to sell. Absolutely nothing wrong with that. Okay, because that's what you see. You can't see all of this. Now the bears are seeing that and said, okay, this is absolutely beautiful. So let's get into the market. They jump into the market. I wouldn't go and sell the next candle, 3-4 candles later, but you can use it for profit targets. That low, and I'll tell you why just now. You got profit targets even lower, way down here. If you don't get on the first candle or the second candle, it's probably best to wait until you see strategy number 2. Okay, because there's nothing you can do about your stop. Your stop is far away. Okay, so you can still say sell here, but you can't put a stop here or there. Your stop is far away. If you get, strategy number 2, you can get a better entry than this, but still using the same stop. So that's probably the reason why I don't want to get in too late into a trade. There's nothing wrong with you getting in there and managing your trade. How do you manage our trades? For whatever trade you took, if you're taking the trade there, put your stop here. As soon as you take off half the risk and then behind big trend candles. So, you've kind of banked your profit already. Take it here, stop above here, remove half. When this forms, bring it to above this breakout trend candle. Now, if you've seen these profit targets, when we get here, you're not surprised, right, that this is taking place, because the bears who said, well, we had a big bear candle before the open of the session with a follow-through candle. There is our target for the profits. They have reached that. The bears who said, well, there is a first candle, profit target is here. They still don't put their stop there, put their stop in the correct place, but they look at the measured move of the candle. So all these profit targets have been here. So when you see that, by this time, your stop should be here. It's a decent enough candle for you to put your stop. And when you see this kind of price action, either leave your stop here or exit. Okay, you can exit here, break even on the trade. That is perfectly fine. That is a logical decision. Then, of course, we wait to see the test of moving price. There is a test of average price. Now, after a test of the average price, you want to see the bears give you a bear candle straight away to show that they're determined to drop the prices further. But after the test of the moving average, the bulls came back and gave us a decent enough trend candle. So if you look at these as 3 strong bull trend candles, you don't want to sell beneath that. So just let it go, leave it, and let's see what happens next time round. Rest of the price action, they came back to test the high of yesterday. We didn't get our entries here. Nothing for us to have jumped into. We're in the middle now of a big trading range. So probably just wait. Best try to break out. Where is US Open? US Open is here. That's US Open. Just for interest sake. Best try to break out. They did break out with the low of today. Poor follow through, and now who knows what's going to happen the rest of the day. But the key thing is just to look at the ways you need to interpret what's unfolding for you as the market is trying to break up above the high of yesterday. Look at how weak the bull breakout was and how strong the bear breakout was. All right, guys. Thank you very much for giving me your time. My voice survived. I will catch up with you again at the next broadcast. Take care and bye-bye.